Welcome back. You're still tuned into Markets at Noon, and let's take a look at what markets are doing this afternoon. And we've recovered from the lowest point of the day. In fact, as we speak, Nifty is now trading at the highest point of the day, nearing that 26,000 mark yet again. In fact, we're just 2 or 3 points away from that 26,000 mark. Nifty Bank has been underperforming in trade today, a trend that was not the case in the last two trading sessions, but we've some kind of underperformance as far as the Nifty Bank is concerned. Small cap index under pressure, but mid cap index is showing signs of strength. IT stocks meanwhile are bucking the trend. We have Infosys, that one is up 3.5%, HCL Tech up in excess of 4%, and Wipro is another gainer in trade today. Real estate stocks meanwhile are under pressure. Godrej Properties, DLFs, Phoenix Mills, all of them continue to lag in trade today. Based on news flow, we have several other stocks. Tata Motors passenger vehicle on the back of the city resuming coverage with a sell rating. That counter is under pressure. KEC International, they've been barred by Power Grid for 9 months. They will not get any orders from Power Grid, so that is a knock, 5% lower on that counter. Vari Energies, Aditya Birla Real Estate and Intellect Design are also some of the other stocks. Avanti Feeds meanwhile is up nearly 8% in trade today. LTTS and Endurance Tech are some other stocks that are buzzing from the broader market. So yes, a whole host of stocks that are buzzing in trade today. But to understand what the fundamental setup is looking like, we now have Tridib Bhattacharya, President and CIO Equities at Edelweiss AMC, now joining us. Mr. Bhattacharya, afternoon, and thank you so much for joining us today. What do you make of the market setup now? Q2 earnings were largely okay, no major negatives as such. Management commentary for the second half of the year from across the board continues to remain very positive. Any sector that you have now turned positive after the earnings season?
Good afternoon. Thanks for having me on your show. Yes, I think the three themes that the market is warming up to are, in my opinion, from trade conflicts to deal making. The last 12 months have been full of trade conflicts somewhere or the other. I think there is a general expectation that along with the India-US trade deal, other countries will also see something similar, and this is a positive catalyst for equity markets in general. So that's something that you're seeing in the form of general buoyancy in the markets. Second is something that you alluded to, and I'll take this forward, which is the beginning of an earnings upcycle in India. If you look at the last 12 to 15 months, earnings of India Inc. have come off anywhere between 12 to 13%. And India has been on an earnings downgrade cycle since we went into national elections last year. This changed in Q2, in the result season that just went by, where for the first time in so many quarters, we saw an earnings upgrade on net balance of about 2 to 3%. This is what the market is rejoicing at the moment in the form of broad-based strength. Whether this will continue into the next year is probably a question for another day. But for now, things seem to be in the positive territory. The sector leaders in this case would be consumer discretionary, along with financials are the two areas that I would point to where particularly certain segments of consumer discretionary we have turned incrementally more positive on, and also PSU banks or financials, broadly speaking, as the bottoming out of credit growth happens, are the two areas where we have increasingly allocated more weight towards in anticipation of this earnings upgrade so far, and hopefully that continues.
So that sounds good. Mr. Bhattacharya, if you could give us your sense on what lies ahead for the market, because 26,000 seems like a tough spot for us to stay above. Yes, we've reached that nominally, but it's proving to be really difficult. What could be the next trigger in terms of good news or positive news that would keep the market above the 26,000 mark? And how soon do you think this entire US-India trade deal rhetoric could see some more clarity?
Sure. So I think if I were to throw some light on the market setup, first I would look at valuations. If you look at valuations today, particularly on the large cap or the Nifty 50 levels, at 20.5 times 1 year forward earnings, we are broadly at par with 10-year average. After close to 12 to 15 months of time correction, broadly speaking, and the earnings have grown, the valuations have kind of rationalized to a certain extent. On mid and small caps, while they were at about 20 to 30% premium to 10-year average earlier, they're now at about 10 to 15% premium. So the premium has come down, They are still trading at a premium and for justifiable reasons, but the premium has come down. So valuations set up today are or is a lot more palatable than what it used to be. If that be the case, then the heavy lifting needs to be done by earnings. And as I said, the markets are at the moment rejoicing the fact that Q2 has been good in the form of earnings. For us to see sustained upside, and I wouldn't get caught up in the Nifty levels, but I would say that for us to get sustained upside from current levels, we need consistency of earnings upgrades. Particularly going into the Jan-March quarter, I think is something that markets would actually watch very closely. Given the GST cuts and various different macro parameters or macro stimulants that the government has given, we have seen an early a bit of boost on the earnings. Under normalized circumstances, whether that earnings upgrade sustains is the key to sustain market upside over the next 3 to 6 months, in my view. My guess would be the chances are that it might go that way, but that's what the markets will wait for before they take us to fresh highs.
We are talking about fresh highs. I understand we are still away from that, but Nifty has yet again crossed that 26,000 mark as we speak. But if you can tell us, since we are talking about fresh highs, what will your next target be by the end of this calendar year, by say March or April next year? Where do you see Nifty headed? Because most of the macro concerns are largely behind us. What is stopping us from scaling that new fresh high yet again?
I think if you look at the last 12 months, India is broadly seen as an anti-AI trade. While AI beneficiaries and economies that benefit from AI have done phenomenally well in terms of share price performance, India has been a global laggard over the last 12 to 15 months. I certainly see this reversing over the next 12 to 15 months because overall, some of the headwinds with regards to whether it's the trade relationship with that of India, United States, etc., which kind of became a headwind, will resolve itself over the next 12 to 15 months, number one. And also, secondly, some of the buzz around AI might actually soften as compared to where you see it today. It'll be more business-like circumstances rather than the euphoria. And under those circumstances, India, which has been seen as an anti-AI trade, certainly would actually come to better limelight than what it was before. So net-net, without getting into actual levels, I would say that India, over the next 12 to 15 months, has a good chance of outperforming the rest of globe, if you ask me, as compared to other markets, given the areas that I talked about.
So, Mr. Bhattacharya, based on this and based on the kind of potential we have to grow in the IT segment, would that make you positive now on the overall IT sector? And other than that, which sectors are you liking and which ones would you avoid for the time being?
Yeah. So IT has been a contra call from our side. We have been neutral to marginally overweight on this space for the last 3 to 6 months, arguably a little early, but better be early than late. We think that given the negative macro conditions where they are, if they ease a little bit from a near-term next 6 to 12-month perspective, that itself calls for a bit of a better time for the sector from a share price standpoint. Earnings are bouncing around the bottom, and you would be surprised to know that in the current result season, IT services as a sector saw about 3% earnings upgrade for the first time, and not expected by many over the last 12 to 15 months. So we have IT has been a bit of a contra call for us. It remains that way. We are marginally overweight, and we think that over the next 12 months, we might see a bit of better days ahead with better CY26 budgets coming through. There are structural issues with regards to how the industry adjusts to the AI environment. I think the industry, like in many previous turns, will be able to do so. And the evidence of that will come through over the next 2 to 3 years. So incrementally, and we have been over the last 2 to 3 months more positive on IT than what we were before.
Okay, so sounds good. Mr. Bhattacharya, on that note, we'll let you go. Thanks so much for your time and thank you for highlighting all the sectors that you're liking for our viewers as well.
Thank you.
Okay, viewers, on that note, we'll slip into a very short break and many more interesting conversations lined up on the other side. So you stay tuned and we'll be